With a name like Moon and Papa, you'd expect me to be way more excited and bullish about the current market. But the truth is that there's an unfortunate small hitch. There's actually a couple of small hitches in my bullish outlook for BTC, which will have a negative impact into everything else, essentially, all the low caps, all the mid caps, everything, because that's what the multiple factor effect is all about. But the main thing that I'm looking at right now that I don't like is on the 4-hour time frame for BTC. And it's this one little pink triangle. What is going on? Why is this so bad? And where do I think Bitcoin is headed next? All of that in today's video here on Coin Bureau Trading. My name is Aaron Dishner from The Better Traders, and you're watching the Coin Bureau Trading channel. If you haven't already subscribed yet, hit the button, like the video, take out a pen and paper because you are going to want to take notes in today's video. So let's start off with the good news, because everyone likes good news first, right? Well, the obvious good news is that BTC is looking really good. I mean, on first glance, it looks good. The price has moved inside of the daily TBO Cloud. It's moved above the first resistance fan. I mean, the slow line right here, the slowest moving average of the TBO is still moving up. If we look at RSI, RSI is testing overhead resistance that's been in place for a long time, established here in November and then supported here in January. I mean, everything looks good. So what's the bad news about that one little pink triangle? Are you sure? Let's actually just tiptoe back and not go there first, because what I want to share with you is actually a lot more elementary. There are actually 3 things that are looking a little bit bearish on BTC that are making me a little bit more cautious and kind of expecting a minor pullback, very small. I know we all have PTSD ever since about Monday, the 24th of February, because we've seen Bitcoin fall very far from 96K all the way down here to about 76K, which has not been a very fun ride to be on. I'm ready to get off the ride. I'm ready to go back up top and keep shooting up higher. I know a lot of you are in that same camp as well, but we need to also be realistic. For one, when we look not at the TBO, not at TBT Divergence, not even the price action, but when we look at volume, I'm sorry to say that volume has been piss poor for Bitcoin. Whenever we have periods of little to no price action and very, very, very low volume is bearish. We could even just take price action in general. If we go back to this period over here in the middle of February, and I remember laughing at this, saying, this is the most despicable price action I've ever seen. The price of Bitcoin stayed in a measly 2.5% range for over 2 weeks. But more importantly, during that same time, volume was awful. And you can see here we have this yellow line. This is a moving average of the volume. And guess what? It was heading down. Well, unfortunately, we all got our wish of a lot more volume, except that was when the price absolutely tanked and started dropping in the end of February. Now, again, don't freak out, because I'm not expecting that same exact outcome. But what is extremely similar, and I'm not really excited about, is that even though this yellow moving average is kind of sort of flat, the reality is that all we need to do is just look at these columns right here, these bars. We've seen daily volume just drop lower and lower. Yes, we had a little bit of an uptick on Monday. I was actually extremely excited to see this much volume coming in. Yet the major problem is that we have not seen daily volume exceed this yellow moving average, which is a bad sign. It's a bad sign because, well, if we want things to be bullish, we definitely want volume to be overwhelming the moving average. Let me show you a quick comparison, okay? Let's go back over here to November when we had the election pump. Now, whether or not you like the election results, it doesn't matter. We're talking about price. So just kind of bear with me, okay? When we see price grossly outperforming the yellow moving average over and over and over again, this overwhelming volume is indication that there is a strong trend intact. This one happens to be a bullish trend. When we go back over here and we watch this terrible, terrible fall that we've seen ever since here from about February, guess what? We can have the same thing happen when volume is drastically overperforming or outperforming or outdoing the moving average. That indicates an extremely strong trend. And when that volume starts to peter out and fall down, well, then there's a lack of selling that's happening. Okay, so it's very elementary to look at volume in this way, but most people miss this really simple fact. We have a problem. As long as Bitcoin stays in a very tight range, which it kind of is right now, and volume continues to just drop more and more, this is bearish. It doesn't matter if there is a CME gap. It doesn't matter if you have a pink triangle. This is our first bearish warning sign that I'm seeing. Now, yes, there are some really good things that are happening in regards to resistance levels being broken, in regards to, making higher local highs. We still have a lot of overhead resistance to go. But the fact of the matter is that volume falling like this isn't good. The other thing that has me a little bit worried and cautious is that we have a newly opened CME gap that opened earlier this week. Now, I'm sure that we would all be extremely happy to never hear the words CME gap ever again. But the reality is that the CME, the Chicago Mercantile Exchange, unfortunately has a lot of sway in regards to closing these gaps. And a gap is determined by these, gaps in price. And this happens a lot in the stock market. And there are some traders that live and die by gap fill trades. But what we're looking at right now is essentially a very tiny gap that opened up here on Monday. We had a really nice open on Monday. Again, much to my surprise and disbelief, and I'm very happy about it. But we have a really, really tiny gap. And this gap is about 3.5% below the current price of about $88,000. Now, don't get me wrong. Bitcoin falling down 3% is no little achoo, especially looking at all of this violent price action that we've seen. Just to help you out, this close right here on Thursday the 20th, this is negative 3%. This is negative 3%. This is negative 3%. We've seen a lot of these negative 3 and 4 and 5% closes for a while. So what I'm expecting to have happen is a lot of PTSD bulls going, oh no, we're going back down again. I thought we weren't going back down again. I don't want to go back down again. I don't want to go. People are going to start freaking out and they're going to overreact. And what will most likely happen is something called the multiple factor effect. And I posted a video here on the Coin Bureau Trading channel a while ago. I actually don't even remember when it was, 2 months ago. This video is extremely helpful, especially if you're new to cryptocurrency and you don't understand what I'm talking about, but to make things really, really simple and really easy. The multiple factor effect is essentially an order of magnitude in terms of volatility. If Bitcoin is going to fall down 3%, then we can expect altcoins to fall down anywhere between 1.2 times to 2 to sometimes even 3 times more, whatever Bitcoin does. It also works in reverse. When Bitcoin's super bullish and we get a pump of 5% for Bitcoin, well, we could see a pump of 10%, 15, 20% for alts. Alts will always overreact to whatever Bitcoin is doing, for better or for worse. The unfortunate truth is that with this looming CME gap just below the price at around $84,000 and falling volume, it's not really a great combination. The last thing I want to share with you is actually something that's making me a little bit more concerned about what could happen. But before I get there, I do want to draw you. Don't you hate that? Oh man, so close. I'm going to get there. But seriously, this is a really, really, really good thing. I need you to pay attention. In the description below this video, there are lots of different links to sign up for different exchanges. CoinCatch and 2bit are both non-KYC exchanges, which is great because that way you get to withdraw up to $50,000 per day. I'm using CoinCatch, and I'm also using Bybit to trade on spot and futures or derivatives. These are great markets, and if you click on this, you're going to be taken to the CoinCatch website, and you can sign up. And when you sign up, you get a special referral code, and in that code, you're going to get a special bonus when you sign up. Plus, you can earn even more in bonuses. Same things goes for 2bit and for Bybit, but there are even more deals in the Coin Bureau website. If you go to coinbureau.com and click on deals, you'll be brought to this page right here. Now there's a link right at the very top for you to join their private Discord server where they have a ton of information. I kind of teased a little bit of it earlier this week in a previous video. Of course, there are other exchanges you can sign up for, but even better than that, if I'm not gonna, toot my own horn too much, but there's actually a 10% discount on our course, 15 Minutes of Financial Freedom at the Better Traders. When you click this, you'll be taken to our website where you can get 10% off of our most popular course, which comes with coaching. It comes with DCA bot trading strategies using alt trading, comes with a trial of the TBO indicator, a lot of great stuff. But again, all of that is in the description below this video. Now, what else am I looking at that is making me feel a little bit worried, a little bit concerned? Well, on the 4-hour time frame, I always look at charts with the TBO and with TBT divergence, even on the daily as well. Like, these are my two go-to indicators that I've been using for a long time, and they work extremely well at helping me gauge the strength of the trend and where there are reversals. And that's what TBT divergence does best. It lets me know when there is a divergence between price, volume, RSI, and a bunch of other mathematical factors that honestly I don't understand because I didn't really take trig. And no, I'm not kidding. There's there's math stuff in it. That's embarrassing. Let's keep going on, okay? All right, and as I'm cracking my voice, we're just gonna keep cracking through this video. Now, the bad thing that I'm seeing right now, the thing I don't want to talk about, and I really don't want to be making a video about this because I'd much rather be bullish, is this guy right here. TBT divergence lets us know when there is a divergence, meaning we see price going up and volume or RSI or lots of these other mathematical values that are happening when there's a divergence. Convergence is when these things are going together like this. So we are seeing a bad sign. Price is going up, but things are falling. And this actually correlates really well to what we're seeing on the daily time frame. If you don't remember already, volume has been falling. We actually have that CME gap that's just below our current price, about 3% or so, okay? But I want you to keep watching because I want you to understand why this signal is not so great. But there's a chance that it could also be a fluke. And I'm really hoping for that outcome. Now, we have bullish and bearish TBT divergence signals. Some of these are going to be wrong. Some of these are going to be, man, oh man, spot on. Like, this is a beautiful reversal signal right there that yielded a nice 12% move. Now, because we're on the 4-hour time frame, we cannot look at any of these signals as like, oh, a generational entry signal. But these are good entries when a chart has pulled back, with a couple of stipulations. Vice versa, if we're looking at these red triangles, if we're not using leverage, then we could look at these as reminders to sell. Now, these dark red or like cherry red tabs right here, these are actually TBT divergence clusters. All these clusters mean is that when we get a lot of these happening in a very tight range, and I think my cluster gap is at 6. So if this is off, then there's going to be these pink triangles. But the reason why I like these clusters is because when I see these, this grabs my attention. This is a very bearish signal. And unfortunately, I wish I took this one much more seriously because, man, oh man, did you do a great job pretty much marking the top. But you'll also see right over here, we have TBT Bearish Divergence clusters when BTC was at 89K, only 2% or so above our current price. So why am I looking at this one as a great signal, but not this one? Well, this is where the TBO comes back into play. And to make this simple, all we need on the TBO, and again, the TBO is essentially 4 different moving averages, and that those averages combined comprise of the TBO Cloud, which is what I call this thing a lot. If you've ever used the Ichimoku indicator, it's very similar to that. So when we have an extremely bullish and a very much uptrending slow line, a very bullish cloud, I tend to ignore these. Eventually they're going to be right, but I tend to ignore them because we have an extremely strong uptrend. So when I see these bearish divergence signals, there could be a short-term pullback, but ultimately the trend is bullish. So I'm not going to really pay attention to it as much. While this one happened to be right, and it did yield a drop of 7% or so, the price did continue to move up. Now, when we see this one right here, this is where things start to become a little bit more tricky, because when we look at the TBO slow line right here, and when we see it start to become flat, this is indicating chop or consolidation, and these signals become a lot more believable as well. Now, ideally, the ideal situation is that when we see like a signal like this is an amazing signal, mainly because when we have a very bearish TBO slow line, but we have a bullish TBT divergence signal like this, usually I wouldn't pay any attention to this, but knowing how oversold the chart was, this was a great signal. Now, I want you to hold on to that. The TBO slow line helps me to get more confidence about these triangles that I see on the chart. So again, that's why I was saying, because the TBO slow line was so bullish during this period from November into December, I didn't really look at these guys with a lot of fear or panic because the trend was extremely strong. But you can also see many times when the trend was just starting to pick up, either being very bearish before or flat or kind of flat, kind of moving up. We can see many, many, many times where these TBT divergence signals preceded a 9% drop, preceded a mini little 4% drop, preceded an 8% drop, preceded a 5.5% drop. We can actually keep going. There's another one right here. Now, this one is during a fairly bullish TBO slow line that's happening. So the thing I'm trying to help you see right now that I'm a little bit worried about is the fact that we're seeing one of these right now on the 4-hour time frame. It had just closed basically before the new daily candle opened. We could continue to see the price of Bitcoin go up higher. But the fact that we got one of these and we're starting to see the slow line, it is moving up. I'm trying to stay positive here. If we zoom in just a little bit more, you can see the slow line is starting to, let me draw it a little bit better. There we go. It's starting to flatten out. But the hard thing I'm trying to wrestle with right now is that if this is right, it wouldn't surprise me to see Bitcoin fall down anywhere from like 3 to maybe even 5%. I mean, some of these other drops that we saw back over here before Bitcoin actually took off was 9%, 4%, 8%, 5%, 7%. So we're looking between 5 and 7% of a pullback. A 5% pullback from these current levels would be pretty bad. Dropping down to 83K would shake a lot of the market's confidence. Down to 9% would destroy a lot of people and wipe out tens, maybe even hundreds of millions, more like hundreds of millions of leveraged longs. So I am looking at this and I'm not trying to incite fear or panic, but what I think it's smart to consider doing is look at this with at least a little bit of a sober mind, knowing that we have a CME Gap conveniently 3% down from our current price, knowing that on the daily time frame, we have falling volume, knowing that we have this CME Gap right there. I'm looking at this going, no, thank you. I'm okay. We can just kind of keep going, right? It's all right. You don't have to drop any further. But I would also not be doing a very good job of being a non-biased trader if I'm not also paying attention to the bearish reversal signals. And that's exactly what we're seeing flash. The main things I need you to understand is there's no need to panic right now. If you're in profit on any of your positions, I've protected profit with a stop loss. So if I've entered here, whatever this price is, and I put my stop loss just above it, this is in the profit zone. It's a really good strategy to help preserve profit. If you're using DCA, make sure you have funds freed up just in case the market drops a little bit more so you can buy the dip. And then when it bounces back up, you can sell a little bit at your entry. Or if you're feeling a little bit cautious, you can kind of hang out on the sidelines and wait. Now, I want to make sure that this part at the very end is for all of you amazingly loyal people that watch to the very end. Because the conflicting part about this video is that there are lots of really bullish things happening. If you watch my video from Monday, I shared a bunch of meme coin charts that are still doing really, really well. And I expect them to continue to do so, mainly because if we go back over here to TradingView, there's actually some amazing signs happening. If we look at the total 3 right here on the total 3, again, this is excluding Bitcoin and Ethereum, so this is kind of like top 10 and top 20. We have a TBO close short. This is a bullish reversal signal. This is a great signal. On the 4-hour time frame, and I have to reset my settings, we also have a TBO breakout here on total. Nothing yet on total or total 2, but total 3, yes. And guess what? While others does not have a TBO close short yet, I'm actually expecting one to print pretty quickly, because on the 4-hour, we're seeing TBO breakouts, which mean that we should be seeing the others market cap explode to the upside. And the last several times that we've seen a TBO breakout, pay attention to these white dots that are right over here. They're hard to see. One of these was right at the very tip top, which wasn't great. This previous one right here, just before the rally, moved up 80%. We have another one right here just before the rally that moved up 16%. Another one right here that moved up about 9%. The reason why I'm really excited about this, and again, I feel so conflicted, is that this bullish explosive signal, pre-explosive signal, is happening before we see any sort of major move for others. This is letting us know that there's way more gas in the tank, but seeing a bearish signal from BTC on the 4-hour time frame is just making me shake my head and go, no, please, no. So while I am extremely cautious about what could happen, I'm also still trading this. One of the best strategies that has served me so well for 8 years and counting is DCA. I've used DCA both in bear markets and bull markets, and it continues to outperform using a stop loss. I am not using DCA with leverage. So with leverage trades, I am using stop losses, but for spot trades, I am using DCA, much to your surprise, and it continued to serve me extremely well. I still believe that we're in a bull market. I still believe that we are in a buy the dip market. But this doesn't mean that we turn a blind eye to bearish reversal signals and obviously bearish things that could happen. So I kind of have 1 foot in, 1 foot out, and apparently I have to play the hokey pokey and turn myself about, because that's what it's all about. But it's important not to stay on one side of the line. You can't always be super duper bullish. You can't always be super duper bearish. But that means that you have to kind of peek over to see what is the other side's feeling. What are the other sides of the market showing you? The parts that you really don't want to pay attention to, either bullish or bearish. And you have to learn to accept that the market's going to do whatever it's going to do. But when we have non-biased signals telling us and flashing bearish signals, it's kind of hard to ignore it. Now, I'm really curious to know what your guys' thoughts are in the comments section down below. Let me know what you're thinking about the current state of the market. And again, I want you to watch this video. It's going to pop up right here about the multiple factor effect that will help you understand why, when Bitcoin makes just the smallest little move, that we see alts absolutely pump or dump. So until the next time, you know what to do. Stay awesome and stay in the green. Peace.